Welcome to readtheticker.com. Today we're going to talk about scanning with the Wyckoff base and stepping stone pattern. A bit more of a deeper look into how you can monitor accumulation and or distribution and how to profit from it. Let's have a look. Within the workgroups page you have your groups, and within your groups you have your symbols. I'll scroll down below here. I've got a group called Economy, and you can see the shortcuts to the pages of charts. There's steps, volume wave, flash, cause and effect, 1 per page, 10 per page. And within my group I've listed a bunch of ETFs that resemble interest rates, currency, commodity, stocks, metals, just so I can keep an eye on what's going on in the trend. I'm looking for a Wyckoff pattern of accumulation that can be represented by a base or a stepping stone, and I want to see stuff that is strong with relative strength. I want to be able to do it quickly. Right, so what we do, we would select the steps button. The steps button activates the page load of up to 50 charts per page of your symbols within a group. So here I have the US dollar. This is the first one, UUP ETF. And why is it a step? Well, obviously we want to see a stepping motion where we have higher steps and no breaks. Here we have a daily chart. I've got about 200 bars in there, so I can see just under a year, about 9 months. And here I've got a weekly chart. Now once again I've got a base pattern here. That's my accumulation, and we've got a movement up. And here we can see minor stepping stones where we have an advance, a pause where people adjust their positions or regenerate the price, and then it moves up. We've had 3 stepping stones in here. These are the minor ones here. Standard continuation patterns, and the idea is to go through your checklist to identify, yes, we have a base, we have accumulation, yes, we have markup, yes, we have a continuation pattern forming, yes, it's forming a stepping stone. The size of a stepping stone generates a move because it's extra energy burning up, and the RTT-OBV down below has bullish signals around the -15, the 0 and the +15. And obviously the more bullish ones are near the 0 and -15 because the pullback is more interesting around here. Very strong ones are around the +15 because the market's strong, but you have to understand you really want the steps to hold its form. So the RTT-OBV is well explained around the site. Sorry, the RTT-OBV is well explained around the site, so keep an eye on that. So we've got a weekly one and a daily one as well. So what I'm looking for, these charts are ranked by RTT rank, so the strongest trending chart is at the highest, and the lowest chart, obviously when we scroll down a bit, at the bottom. So I'm going to scroll down to the bottom to show what the lowest chart looks like. For the extreme, obviously it's crude oil and it's trending down fast. And as I have a bullish step on here, it's not a good sign to be bull, but we do see some basing around here. I'm going to scroll up a bit further. I think we get to, I quite like to look at TNX. So here we have TNX. There's no volume, so we can't have RT Trend Power OBV. But what I want to show here is the weekly chart does not look bullish at all. The step broke and fell down. Price actually fell into the shaded range. But on the daily one, we actually see a smash back up into the step, a test, and it held. So that was the first bullish sign. It wasn't really a good reason to go bullish, but if you were short that, you would probably want to get out because it didn't smash through down to 1.9. So we have an ABC up here that broke into there. So the point about it is when you see the steps that are about to be born, and obviously if you have a bullish step, it continues higher. So you have to be pretty nervous. So this was the first sign that things are, changing for the interest rate market. And here's another one here. This is XLE. I know you can't see the information on the left, but it is the XLE. Here we've had the market falling on a weekly basis, but as the market has tended to go sideways, we've entered a base step. It doesn't mean it hasn't stopped going down, but we've had a test here. So it goes into the step. It had a test. That's the first sign. You might count 1, 2, 3. So that might be a triple bottom. But as you can see, it took that long to form. The RTT-OBV went down to -15. So that was a bit of a bullish setup, and we've got a bounce, but it doesn't mean now we want to see what happens here and how this pullback hopefully should hold above 75, and if it does, that is a test of the triple bottom pattern, and we may be going bullish. But like I said before, this is the early stage of the birth of a step, early stage of accumulation. We only know it's an accumulation when it breaks up and starts forming steps to a higher level. Because we're looking at don't forget we're looking at charts that are ranked poorly. This is ranked 48, so it's one of the poorly ranked ones, so it has to prove that it's going to go up. Okay, so what we look at here, we got scroll up a bit. Here's a recent failure. For example, we've got a stepping, we see in the daily chart, see the weekly chart here in the daily? The weekly chart has been stepping up nicely with no deviations down. And here, the daily chart has been stepping up, but as you can see, it broke down, tried to recover, but failed. So that's the first, we got a bit of weakness here. Now, for us to be really bullish on that, price would really have to break up to 46 and stay there. So obviously the trend is changing there, and as you can see there, it's just broken into there. So that, what does this mean? It means the stepping stone is busted. We need time for the sellers to wear itself out and demand to prove that it's back there. So we probably have to wait. I would suggest maybe 1 month, 2 months, 3 months before going long. Obviously, if you're a bearish trader, you have to look at a bearish stepping stone. Okay, now here's a nice pattern. Here we have XLI Industrials. Now here's an important characteristic of the stepping stone that all members should understand. OTPV smashed, RTT trend power OPV, it's a mouthful, smashed down to below minus 15, smashed back up. That was literally a bit of a buy there. But what's important here, see how this daily stepping stone maintained its form and didn't break? It's because this was a shakeout. And the fact that the price smashed down and smashed back up and busted stops was a shakeout by the strong bulls on the weak bulls, and it recovered. And the fact that if you wanted to get involved in this and it got back up to the stepping stone was maintained, that's okay. But if it's shakeout and it forces the steps to break down, then I would be a bit more cautious and stay away from it. For example, here's one that breaks down. This is need an example, don't we? For example, here's one where we don't have a reconsider, but there's a shakeout, it recovers, but the step never really forms up. Price doesn't get high enough, so there's no proof that there's demand back in that market. But an XLI, it smashes back up and does this nice tight little pattern. Stepping stone's been maintained, and that was fair game for any bullish trader out there. RTTOPV bounced around the zero marks. When you got RTTOPV bouncing around the 0 or minus 15, and you got the step maintaining its form, you have a very good picture. Here's a better example. Now here we had a smash down. This is IWM. Some real weakness came in the market here. The step actually broke its form, but yes, price did break up through the lower stepping stone. I would not have chased that one because the step was busted. There's too much selling around. It actually held up, and it really did start proving itself that the bulls are back in charge around about here. So that was a much more riskier chance to have a go. I would have looked for something else. But yes, it did work, but because the stepping stone was busted, there was a lot more aggressive selling going on here. And the weekly chart, as you can see, there was that time frame there, busted into the green zone. Now I've got, just to highlight, I've got a stepping stone poised at a level below the price action. Here I've got a stepping stone poised to cover the price action. It's only because the settings are different. This is a daily and this is a weekly. So yeah, okay. This is TLT. Here we had, we've had a bit of a sell down, busted through the steps, up and up there and failed. Obviously, I've never got long back there again, and it could have even been a short. I would have had to consider my bearish stepping stone. This is a bullish stepping stone. As you see, I've got it set up there as a bull. So that was your probably first idea that interest rates were going to go up. RTTOB, you don't really want to see it fail there, but it did fail. So I'd have to let this pattern, obviously I'd have to wait to let this pattern form, go sideways a bit, maybe another month or two. We'll find out if interest rates are really going up. Okay, here we got the Dow Transports, IYT. On the weekly chart, look how strong it is. It hardly ever goes into the green zone. A bit of a smash down there, forming a pattern up here. This is still attractive. Once again on this shakeout here, it smashed down, smashed back up. The stepping stone was not affected on the daily pattern. This is obviously a daily versus the weekly one. The daily stepping stone is much more sensitive. So when that doesn't bust or doesn't step down, you know that the bulls are still in charge. So this is a shakeout, nothing short. A few little tests of the area, but it's still holding up. Failed to make a new high, so we are either trending sideways. So I'd have to be a bit more cautious here because you want to see accumulation turn into markup. It hasn't done so here, so I'll be watching for this to turn around. So far it looks like a bit of a light volume sell-off. XLF, here we have a nice stepping action here. Here we had a minor step down, so there's a bit more selling going on here. Smash back up. Yeah, it worked, but it wouldn't be your first choice. You don't like to see steps back down there because there's other markets that show a strong step. Let's go up here. For example, I'll compare XLF to a stronger market. Here we go. Compare XLF to XLP. Here we've got a nice strong, this is consumer staples. Obviously it's hardly ever gone to the green zone, it's stepping nicely. Whenever a pattern goes sideways and doesn't really retrench more, you know the demand's piling up at the base level. We had a minor step down there, but it was tested here. The stepping stone did not break. So that was just a standard shakeout. And it's quite funny how just after the shakeout, after a period of basing, that's when prices break into new highs. You get a shakeout, then prices bust into new highs. Stepping stone being maintained here, so the bulls can have plenty of fun with this one. Yes, we have a bit of a sell down today, but we just have to wait and see what that turns into. Technology, yes, it broke the step. I would have maintained it on the weekly chart. Like I said before, weekly chart holds up, daily doesn't. Yeah, it's been the top choice, but I'll still look for something else. Something like this one. Here we are, health sector, XLV. Look at that bullish chart, just hasn't stopped going. Don't make it hard on yourself. Look at that, it's just accumulating, bouncing out, forming reaccumulation patterns. The odd little bust down here, that pattern there, is this shakeout here. See how the stepping stone wasn't busted? That's just gravy. You can easily take that on. So plenty of chance to enter that. And obviously if you're looking at XLV, you use your relative strength test to go into the stocks to find the stronger stocks. Where we are. Yeah, so nothing wrong with the health sector right there and then. The pattern I'm really talking about is this pattern here. The step. Just like your steps to your garden deck. It maintains that, and you want to see demand defending the support line. You should be concerned when demand does not defend the support line. And we've had a very strong bull market from 2009, and pretty much you don't have to be too smart to be a fund manager. You just got to play the steps, buy the dips, and choose your relative strength stocks, and let it ride until it breaks. And when your support line is busted, there's some heavy selling going on, and you have to be very, very careful. So I encourage members and new users to check out the stepping stone step scan. Choose on relative strength. Combine it with the RTT OBV or any other tool that might be listed there, over MACD and other tools. So if you understand how RTT OBV works, for example here, just to highlight this, this is a strong one. We've got a very strong chart, XLV. The steps are maintained. Checklist 1. RTT OBV falls to -15. It recovers. That's a buy there and there, and a strong buy. You can load up, 20-30% of your portfolio. Once again, the price falls down. It falls down to -15. You can buy it there, no problem. There, it recovers. It's around here, and obviously that's there is no problem with that. The proof of the demand is that the stepping stone maintained, price defended the support, and the RTT OBV, which is a volume weighted indicator, showed the volume pouring in at the -15 and the 0 level. Thanks for watching.